Today, I want to talk about how two major banks are on the brink of collapse and how the shorts can't find a single real share of any of the stocks in the meme stock basket to locate. So stay tuned and let's make some money. I also wanted to announce a flash sale at the Millionaire Mindset Trading Group to celebrate today's 1,560% gainer on DRUG. This stock ran from $3.60 to over $50 in just one day. So be sure to head over to the Millionaire Mindset Trading Group website and use code FLASH at checkout for $100 off the price of the lifetime membership or 25% off the monthly membership. So let's dive straight in with the key information. To start, I want to talk about how the shorts couldn't find a single real share of Chewy to sell to Roaring Kitty when he bought 9 million shares. We can see from this screenshot and this tweet from Hedgie McWedgie that all of Roaring Kitty's shares that he purchased back on the 20th of September failed to deliver. We can see on the 20th of September there was 9.4 million FTDs for a total of $280 million. That's obviously a crazy amount of FTDs compared to any of the days that month or even this year where the FTDs have been in the hundreds or the thousands, not in the millions. That means that Roaring Kitty bought 9 million shares and the shorts couldn't find a single real share to sell to him or to give to him to hold in his account. Hedgie McWedgie added, saying all of these dips and fake outs now make perfect sense. The shorts are trying to delay it to the last possible second. Not only can the shorts not find any real shares of GameStop or AMC, but they also can't find a single real share of other stocks like Chewy. And while the shorts can try their best to hide FTDs in stocks like AMC and GameStop, those FTDs will always be found somewhere in the market. So let's also talk about how two major banks are on the brink of collapse. We can see this screenshot from Bigham's, which talks about how Wall Street expects Bank of America to report a 22% profit decline. Bank of America is a bank I touched on last week where Warren Buffett has been selling all of his shares and a bank that's sitting on hundreds of billions of dollars in losses. This massive profit decline is likely as a result of the bank recognizing even more of those unrealized losses. Obviously, unrealized losses don't sit on the balance sheet or go through the P&L because at that point they're unrealized. But as the bank realizes that loss and actually writes off the amount, writes off the debt, their profit does decline. Bank of America has these hundreds of billions of dollars of unrealized losses and is trying to smooth all of those losses through the P&L over a few years as to not cause too much panic. And it seems like for another quarter, Bank of America have recognized maybe another 10, 20, 30 or $100 billion in losses. Bank of America is one of those banks that's barely staying afloat, and that's why Warren Buffett is bailing out fast. It says like its fellow US mega banks JP Morgan and Wells Fargo last week, Bank of America is expected to report third quarter earnings that dropped from a year ago as a decline in net interest income squeezes the bottom line. On top of that, another bank that's not faring well is Deutsche Bank, as a shareholder is looking to bail out of a $279 million stake. And this deal comes amid a flurry of a number of different European companies selling down their Deutsche Bank stock. It seems that Warren Buffett bailing out of Bank of America isn't the only bank where investors are bailing out of, as it seems many European companies, hedge funds, institutions and other investment firms are bailing out of Deutsche. So right now we've got Deutsche Bank struggling, we've got Bank of America struggling, we've obviously got UBS and Credit Suisse struggling as well, and on top of that, Citibank is in the gutter as well. I'm sure there's potentially other banks on top of that are also struggling and also have heavy losses that are still being realised. And therefore it doesn't surprise me why these hedge funds, these shorts and these institutions are trying to hold on to the very last second. No Unusual Wells has tweeted saying this is really weird. A random biotech stock DRUG was trading as a penny stock this morning and it ran over 1,500% today randomly on no news. This is just another example of what a short squeeze looks like during regular trading hours. Interestingly, DRUG was only halted 8 times today, even though the stock price went from $3 to over $50. I remember last time AMC started running, it saw something ridiculous like 30 halts in one day, just moving from $5 to $9. And as I said, we actually traded this stock today inside the Millionaire Mindset Trading Group, where AV locked in nearly $4,000 today on just this one trade, and Deal also locked in $4,600 today as well. DRUG started at just $3 today, it pushed up to $5, it then got the breakout, went through a few halts up to $17, it consolidated, pushed up again, getting another breakout and pushing all the way to $31 before, again you guessed it, more consolidation and then another run in the after hours, pushing all the way to $59.99 per share. And if you didn't know, I review trades just like this one on the Millionaire Mindset Trading Group YouTube channel, which I've linked in the description below. On this channel, I go through trades that I did take and explain why, explaining the different indicators and trading strategies that I'm using inside the group for the members every single day. So guys, be sure to join the Millionaire Mindset Trading Group using the link in the description below, using the sales code FLASH at checkout, and also be sure to have a look at the new YouTube channel if you want to learn more about trading individual stocks. Now, Retail Stocks also tweeted saying that as far back as 2021, we discussed how hedge funds employed teams of psychologists to plot out behavioral manipulation. He said, in other words, they have professionals designed to deal with breaking down you, the retail investor. This obviously all stems from an interview that Ken Griffin did where he spoke about how he has teams of employees at Citadel that predict behavioural patterns from retail investors and trade against them to remain profitable. You may remember Ken Griffin paid millions of dollars to develop an AI algorithm to predict how retail traders behave and to trade against them and beat them. And that's likely where this new narrative has originated from, that apparently Citadel can control everything and that Citadel is in control. It likely originated from the famous video where Ken Griffin said that we set the price and that Citadel decide where stocks should go. Especially when you think that Doug Sifu has also previously said that as an infinite liquidity fairy, he can fill any order even if there's no shares available on the market. But you also have to remember that Citadel is not all powerful, and there's many sources that have said that actually Citadel is afraid of us. Ultimately, the fundamental performance of companies always prevails over time, and always in the course of history, these banks that have generated significant losses have been margin called. Bear Stearns couldn't escape a margin call, Lehman Brothers couldn't escape a margin call, and there's been many other banks and hedge funds since then and before then that have been margin called and shut down time and time again. As a prime example, Bill Hwang, managing a $30 billion hedge fund, went bankrupt and he was arrested. We also had Melvin Capital that collapsed, and we also had Citron Research and many other of these hedge fund research firms that have also lost billions and have also been arrested. And of course, it's very likely, or there's a lot of potential for Ken Griffin to be the very next hedge fund in line. As Biotechmos added, he said trapped short hedge funds stand to lose hundreds of billions of dollars, if not more, and go bankrupt, unless they can make us feel defeated and convince us to sell the shares. He said their psychologists and paid actors are trying to wear us down, but in his opinion, it's not working. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I put a new video. Cheers.